Morning, Steve Freed in Chicago with the morning grain comments. Well, the big news overnight is the claim by North Korea that they detonated a hydrogen bomb. Some of the experts feel that the blast was not big enough for a hydrogen bomb, but the claim did offer some weakness to the South Korean currency and their stock market, and also our stock market's going to open sharply lower. We also have the dollar lower and we have crude lower. And asking Hightower about an anxiety trade, and if this were to continue to escalate. He said that we probably see the U.S. stock market go lower. We could actually see the dollar go higher, and we also could see bonds go higher. So if you want to take advantage of this type of anxiety, that might be the trades. The bears are still in control of the grains. Prices are a little bit lower overnight. We did see where the Brazilians are talking about record soybean and corn exports. We're also noting that Argentina farmers are beginning to pick up sales, and we're probably seeing more competition out of Argentina for both corn and soybean exports. We did note that Deutsche Bank cut its estimates of U.S. Fourth quarter 15 and first quarter 16 growth due to lower manufacturing data. So the negative news keeps piling on in both the financial side of things and also on the commodity side. Funds yesterday, small buyers of the grains, they're still estimated to be short 66,000 beans, 140,000 corn, and 86,000 wheat. We're just above what some people think is a psychological support, 850 beans, 350 corn, and 450 Chicago March wheat. And the market feels that we might push through those levels, number one, if the demand doesn't improve, and number two, if the U.S. farmer, especially in corn and beans, decides to sell additional grain from last year's crop. We've got a report January 12th. The trade's looking for not really a lot of changes in the U.S. 15 corn and soybean crop. Inventories as of December 1 for corn and beans should be record high and up about 150 million bushels in wheat from last year. And there are not a lot of expected changes in the U.S. 15 and 16 corn, soybean, and wheat carryouts. It could make the market vulnerable for a sell-off if the USDA decides to lower demand and raise the carryouts. We also note that this time of year, the funds, index funds tend to rebalance. They're expected to start on Friday selling 17,000 corn, 9,000 soybean oil, buying 6,000 soybean meal. The only other markets that we'll be watching is they're expected to sell as much as 36,000 contracts of sugar. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
It's 11314, and that is buying 3 of the April big S&P